Welcome back to How to Invest, our 7th video in this series. Sorry, I'm on How to Invest for Beginners. Today we're talking about when to buy and sell, which is, I know, a question a lot of people have. It's like, when should I buy this stock? When should I sell this stock? And depending on who you ask, you get a lot of different answers. So we want to make this series in order to really teach you guys the answers that some of the best investors in history have given. Because those with the most success obviously know something. Like, if you have to listen to someone, you might as well listen to someone with a ton of success. So my mentor was Peter Lynch. He was one of the best investors of the last several hundred years. I really highly recommend this book, One Up on Wall Street. Honestly, Peter Lynch should be paying me. He has so much money and we're sponsoring his book so much. But yeah, after learning from him, I have averaged 70% annualized returns since I started investing, which is really crazy. I think over the course of my career, that average will definitely go down. The last couple of years, I've actually had over 100% annualized returns. So Peter Lynch was a really good teacher. And I feel like I have exceeded far beyond any Wall Street manager or anything like that. Anyone you're watching on TV, CNBC and stuff, they just don't have the track record. They don't have the same track record. They don't understand this on the same fundamental level, even if they're on a TV station.
Yep, they're trying to play it way more safe.
Yeah, exactly. So today we're talking about when to buy and sell. You want to say hi to everyone?
Yeah, hi, my name is Abby. I'm kind of a beginner to investing, and so I get to talk here with my brother as he loves investing and is super passionate about it and kind of just teach me and hopefully teach you.
Yeah, sweet. So let's get into it. And as always, as like with the other videos, if you have questions throughout, then you can feel free to ask. So like I do in a lot of these videos, let me just ask you at the beginning, when do you think might be a good time to buy a company?
Well, if you implement the other things that we have been talking about, it's good to buy a company that you trust and you know they're going to do well long term. When they're at a low, when people are saying bad things about them, and sell when people are super overhyping them and the stock is way overvalued for what it's going to be in the next, I don't know, maybe 5 years. But that's just kind of what I picked up from what you've been telling me.
Yeah, no, that's a lot of really good stuff. And a lot of like when to buy and sell too can depend on like the stock category. So if you haven't watched our video on categories, definitely watch that one. Because like if you're buying a cyclical stock, which is in an industry that has a lot of ups and downs, the right time to buy is in the down market right before you think things are about to turn around. But one piece of advice that Peter Lynch gives that I think is really, really good is he says you don't have to guess. It's like you're never going to know how a stock price is going to move in the short term, but you don't have to guess about whether or not a cyclical company is starting to come out of a down cycle, because you can wait, you can be patient, and you can see a few quarters of earnings and actually see, hey, look, their earnings are actually going up, and then you can buy. And you don't have to perfectly time the bottom. You can miss 20-30% of the initial run if it's going to quadruple or something over the course of this cyclical change. So wait a little bit, and that means that the first time to buy is when the story is starting to prove itself out. And that story will be different based on the category. So if it's a growth company, maybe it's small, but it's already started to have success in some additional markets outside of its original market. So you're like, okay, if it's like a fast food restaurant, like Dutch Bros was in California, and they were having a ton of success in California. And then once they started expanding in other states, and you saw, hey, they're getting good sales from these stores too, like, hey, this is probably going to work everywhere. And that could be a good time to buy. So it's still early, but they've proven this growth plan. It's not just a story. There's evidence of what you think is going to happen. Because you can't know what's going to happen in the future, but you can know what has happened. And
like what direction something is moving in.
Exactly. So if you're buying like a recovery stock, it's similar to cyclicals, like a company that's trying to turn around. Don't buy when you think, oh, this is going to turn around, it can't go any lower, because stocks can keep going lower and they can go bankrupt. Buy after the turnaround has started to happen. One thing that Peter Lynch likes to talk about is you can't know what a company's earnings are going to be in the future. You just can't. You can't predict. But what you can know is what a company's leadership's plan is to grow their earnings.
Mm-hmm.
And you can analyze it and be like, okay, is this likely to grow earnings? So like in Dutch Bro's case, if their plan to grow earnings is we are only in 3 states and we're going to double to 6 states next year, and then we're going to double to 12 states the year after. It's like you can't know what a company's earnings are going to be, but you can trust the story, you can trust the leadership, you can understand what their plan is to grow earnings, and you can know that it's likely. Mm-hmm. So when you've done the research and you believe that it's likely that a company's going to continue improving, or they're going to keep taking market share, they're going to keep growing earnings, like that is the time to buy a company. I would highly recommend watching some of our other videos though, because like oftentimes when you want to buy can be a really bad time to buy. And oftentimes like when you're most scared, like that's the time to buy. And then when you're most hyped and bulled up, like that's actually the time to sell. So let's talk about when to sell a little bit. It's when everyone's talking about your company. It's like the bull thesis has played out. Like it's had a ton of success, and now your CEO's on TV and on the front cover of magazines, and like everyone is talking about them, and like it seems like everyone loves them. It's like that can be a sign that the sentiment is now maybe as positive as it's going to get. Mm-hmm. Now it's important to understand the story though, because if a company still has decades left of growth ahead, yeah, maybe you're like, okay, it's probably expensive now. But maybe it's not time to sell because even if it falls back 50%, it still has a lot of growth ahead. So yeah, watching a lot of these other videos that we talk about, we just mentioned so much already that it's going to give you a good idea of when to buy and sell based on the characteristics that we've talked about.
Yeah, one thing I kind of want to say is there's not like it can't go lower because they can go bankrupt. But there is at this time, they can't go any higher. They're not making more. Hype is like you're hearing people on the regular news talking about a stock. Like that just shows like they're not doing anything extra. Over time, it might get better, but like there is a place where it's like, yes, it still can go lower, but there's not always a place where it can kind of go higher is what
Yeah, I mean, in the short term, anything can happen.
Yeah.
Like Palantir recently has been trading at like a 500 PE ratio, which is insane, and just kept going up and up and up and up. But long term, it can't keep going up if the fundamentals aren't going to catch up. Mm-hmm. It can't keep going down if the fundamentals aren't going to crash. So stocks can only go so far away from the fundamental value. So in the simplest terms, when to buy is when something has gone below what you view its fundamental value is. And when to sell is when a company has gone beyond the fundamental value. And it's not because it can't go lower, because it can, but because as long as the fundamentals stay good, it's going to come back eventually. Mm. And it's not because that it can't go higher, because it can, but that it's so far beyond its fundamentals that at some point it's going to pull back and I'm going to have a chance to buy it lower. Gotcha. So yeah, it's about understanding the story and then taking advantage of mispricings in the market. Because the market is very rarely ever like at a perfect price. It's like almost always at some end of the pendulum of overpriced or underpriced, and you just take advantage of it over time. So yeah, it's pretty simple. There's no like magic number. No one can tell you an algorithm that's going to let you perfectly time the bottoms, buy the bottoms and sell the tops. No one can do that. All you can do is say, this company is undervalued compared to its current earnings, it's undervalued compared to its current future earnings, or this company is really expensive compared to its current earnings. And you have to make wise decisions based off of that, knowing that you can't know what the short-term moves are going to be.
Knowing it's not actually a gamble, it's an educated choice and decision. And you can lose a few dollars, but if you're making educated choices, then even if you don't get out at the very top, you're going to get out close to the top and you make a lot of money.
Yeah. And you have to also just understand, like, hey, I might sell this and it might go up 50% more afterwards.
Yeah.
That doesn't mean I made a mistake.
Okay.
It just means that the market had more to go and I'm wise and I'm happy with what I bought. At the same time, though, that's the reason for humility. And why, if you are owning something for the really long term, maybe it's not worth selling because you think it might pull back some, because based on your perspective of where it's going to go, it's not worth playing around with the pennies of trying to perfectly time stuff.
Yeah, that makes sense. It's not just a put in and pull out with more money like how people do with gambling. It literally is about long-term investing. It's not.
Yeah.
It's not wise to short-term try to like get out at the top because you literally can never know. That is literally a gamble in order to do that.
Yeah, but you can understand kind of where your company is in its cycle. You can understand where it is in its growth rate. Like we talked about in a previous video, like if a restaurant has fully saturated the whole world, if there's like not much growth that it can have. So understand that growth companies eventually slow down. And if you understand how the company is planning to grow earnings, you can have an idea for when, you know, their plans aren't as good anymore. There's not much room anymore. They have to get more creative and know, hey, it's probably time to sell here. If it's at a super fast growth valuation and you know that this doesn't have as much super fast growth ahead anymore.
Yeah.
So, yeah, learning the story, understanding the company, and then when the market disagrees with you the most, taking advantage of it. Either through selling when it disagrees because it's overvalued a ton, or through buying when it disagrees because it's undervalued a ton. Yeah. All right. So thanks for watching, guys. Episode number 7. This has been really fun recording this with you. It's been nice just to be able to talk with you instead of to a camera. Hopefully you guys found it more personable and enjoyed having her in. And yeah, if you didn't watch the other 6 videos, make sure to watch them. If you're not subscribed yet, make sure to subscribe. Hit a thumbs up if you have not hit your thumbs up yet. And then if you want to start investing, I recommend joining our supporter. What's the website called?
It's How to Invest GB.
Okay. Yeah, and we will be making monthly videos if you want to invest every month with us, and I'll be showing you my monthly buys and stuff in that. So if you want to support us and get a video every single month, that kind of helps encourage you to invest every month, because this is a very long marathon. It's not a sprint. And help you stay in that marathon, then I highly recommend you guys join that. But if you're not planning on investing $500 a month, then I wouldn't recommend it, because then it's not going to be worth it for you. So thanks for watching, everyone. And
Bye.
bye.